Hello, everyone. Hello, everyone, and thank you for joining us at this Your Overseas Home webinar. My name is Christopher Nye, Senior Editor at Your Overseas Home and Property Guides. Today, we'll be chatting with John Dyking from Chase Buchanan about your financial considerations when moving to Spain. Now, that's not the most exciting title, is it? We're talking about money. And on a day like this, especially when we're told that inflation could hit 13%, that's never been more relevant and never been a better time to go and put your money into bricks and mortar, I would suggest. It's great to have you all here, whether you're with us live or catching up on demand. Now, we only have 30 minutes, so we'll get on. If you have a question, please type your query into the questions tab on the right-hand side of your screen. If you need a reminder of anything discussed today or want to share this with family or friends, a replay will be available on the Your Overseas Home website to watch at your leisure. So, John, having trouble with the slides, I think. We got it there. John, it'd be great if you could start by giving us a quick summary as to who you are and how Chase Buchanan can help our viewers today.
Yeah, absolutely. Thanks, Chris, for the introduction. So I work as a... Sorry, are your slides moving? Because I got a bit of an issue with the slides. Are they moving around on your screen, Chris? Or...
They seem to be moving. They seem to be moving around all over the place.
Yeah,
yes.
I'm not sure why that's happening. Sorry about that. I'm trying to move down to the first slide, and there seems to be technical issues. So sorry to everyone on the call. Chris, could you? Is there any way you could control the slide deck or not?
What we'll do is we'll get them reloaded, and I'll see if I can I'll control them. Okay.
Please, yeah, thanks. So, just to introduce myself in the meantime. So, as I said, work as a private wealth manager for Chase Buchanan. We have an office in Madrid, where I'm based. You might hear an accent. I'm Swedish, but I've been based in Spain for 20 years. So, I know exactly what it's like to move down here as a foreigner, settle down in Spain, and I've had that challenge many years ago. So yeah, I'm really happy with my job. My job is basically about helping people restructure their financial affairs when they become Spanish residents. And I try to talk to people before they move down, because that's the best opportunity to look at things in the home country, such as the UK, and look at what needs to be done before they move down. So I did have a webinar in May. So I'm going to talk about similar things today, which is about tax obligations that you have when you become a tax resident in Spain. So for some people that may have joined the May webinar, then you're welcome to obviously be here today. It's not exactly the same, and it's also an opportunity to just get a refresher on things. And if you have any questions, I'm happy to answer them as well. What we normally do in these webinars is I'll just talk you through a few slides of what's most important, and you can then, if you have any questions, you can just let us know, and I'll answer the questions as they pop up. And then you have my contact details by the end of the webinar, so anyone that wants to approach me and have a private conversation, I'll be really happy to do so.
Okay. Now we're having some problem with the slides. For some reason, they're going haywire. I don't know why, but clearly it's a bit distracting. So what we'll do is, if you can, perhaps you can explain what they are, and we will send the slide deck to people, to our viewers afterwards.
Yeah, absolutely. That's fine. That's fine. So, Chris, anything in particular you think we should start with right now?
Well, when do you become a tax resident in Spain? I suppose that's the first question. I know a lot about, some people are retiring, some people are buying holiday homes, some people are doing a bit of work from home in the United States. So when do you become a tax resident?
Yeah, it's a really good question. Just before I answer that, just want to point out that today I'll be focusing on advice to people that want to move to Spain, like become Spanish residents. So anyone that just wants to buy a holiday home and not be resident in Spain, they won't really maybe benefit as much from today's session. This is really for people who want to live in Spain and want to understand what the tax consequences will be as resident. When you become a Spanish tax resident, it's quite simple. So the basic rule, and this is the same rule as in many other countries, is that if you spend at least 183 days in Spain in the calendar year, which is the same as the tax year, so it goes from the 1st of Jan to the 31st of December, then you will automatically, by default, be a Spanish tax resident for that year. There are also other rules as well that may apply. For example, if your center of economic interest is in Spain and you'll be deemed as a Spanish resident, or if your spouse is a Spanish resident, you'll be deemed a Spanish resident by default as well. But I think the 183-day rule is the principal one that people should consider for tax planning. So when you become a Spanish resident, it's important to understand that that means that you're liable for tax on your worldwide income from any sources. So whether it's from work, pensions, properties, or investments, that will be taxed in Spain. And if it's taxed at source in your home country, then you can normally get credit for that if there's a double taxation agreement, such as the one between the UK and Spain. If you own significant assets, you may also be liable for wealth tax. The wealth tax is treated differently in the different regions. There may be allowances as well to help you offset that tax. That's something we'll talk about later today.
Okay, so when should I be talking to you in the process? When I've retired, when I moved there, or early on, or when?
Yeah, so I think the best point in time to talk to myself is a few months before you're planning to move down to Spain, because, and I talk a lot, I think most of the people that are moving down from the UK, that's despite of Brexit and people jumping through all the hurdles with the visas, because it's a nice lifestyle here in Spain, but there are a lot of things that you need to plan for and consider before you move down. Other than getting the appropriate visa, and you got to make sure that you understand the differences between the Spanish and the UK tax systems and the different allowances and exemptions available in the UK, which are not available in Spain. So for certain transactions, you need to consider making certain disposals whilst you're still a UK resident. As an example, most people moving down from the UK, they or any other place actually, they tend to have property that they want to sell because they're leaving the country and they're coming down here to buy another property. And it's important to just look at the timing of transactions, because with the UK tax year being different from the Spanish tax year, and depending on when you sell, you may inadvertently be liable for Spanish tax on the profit on the UK property sale, even if you sell before you came down to Spain. So that's why it's so important that you speak to an advisor, someone like myself, who understands the different rules. And I can help people save a lot of tax purely by just planning ahead the timing of events. So this is all fully compliant. Everything I do is, of course, fully legal in accordance to regulations. But just by understanding the differences, you can just time events, and you can save a lot of money that way. So it's well worth having that advice. And it's important as well to consider that income tax in Spain is different from income tax in the UK. So the scales are different, and you can structure your assets to provide with certain amount of income, and you can avoid high tax brackets by using certain types of investments. Because income tax, for example, in Andalusia, where I live, which is the largest region in south of Spain, the tax goes from 19 to 47%, and any income that exceeds 60,000 euros is taxed at 45%, and when you then move up to higher incomes around 300,000 or so, it's 47%. So it's can be huge tax, but there are some allowances that can be used to offset some of the tax, and that's why it's important to plan ahead a bit and see how you can structure your affairs to reduce the income tax. There's also savings tax for anyone that's got investment income. So that covers, for example, dividends from shares, interest from bank accounts, interest from bonds. And the savings tax rates are lower than the income tax rates. So they go from 19% to 26%. But it's still important to plan ahead, and you can save savings tax as well if you structure your affairs accordingly. And so one other thing to consider is if you've got ISAs in the UK, for example, they offer tax-free growth, but only for UK residents. So bear in mind, yeah, as soon as you become a Spanish resident, that ISA is actually not tax-free. Any growth, any dividends received in the ISA are fully liable for Spanish savings tax. As we said, it's between 19 and 26%. So you may need to take certain actions before you move on to just be tax efficient and not pay unnecessary Spanish tax.
Okay. Okay, so we've been hearing a lot about tax in our Conservative leadership election at the moment, but in general, we keep on hearing that the UK is very highly taxed. How do we compare with Spain? I know a lot of people come to Spain for a lower cost of living. Are we paying generally lower tax as well?
It's very difficult to say because the tax system is so different. So it can be lower for certain people, it can be higher for certain people. It depends what you compare against. Because in the UK, you got, for example, for income tax, you got 20, 40, and 50% brackets, and here it goes from 19 to 47, but at different income levels. So I guess it depends on your level of income. When it comes to investments, I would say generally you would have better allowances in the UK because you got ISA allowances every year, you got capital gains tax allowances every year. So for someone that just wants to save a bit of money every year from work income, they can do so really efficiently in the UK. Unfortunately, that's not available in Spain. But the good news are that, because I'm dealing mostly with people that come down here to retire, so they don't really need to put away 20,000 per year or a few thousand per year into an ISA. They've already done that all their life, and they want to take out the ISA monies, for example, before they come here, take it tax-free in the UK, and reinvest it into something that is compliant and tax efficient in Spain. That's where I can help out. So the savings tax rates in Spain on investments are not too punitive. It tends to be between 19 and 21%. It only goes up to 26% for really high investment income. But the investments can be used that you can actually defer a lot of taxation, and you only pay tax on a small proportion of any income you receive. So that's something I'm happy to talk about. Anyone is interested in getting a tax-efficient retirement income. Here in Spain, I work in different regions. So even though I live in Andalusia, specifically in Fuengirola, near Malaga, we have an office in Marbella, but I tend to speak with people that are moving to different parts of Spain, and it's important, to understand that there are regional variations on the tax laws. So someone that moves to the Alicante region will have different rules to follow for taxation than someone in Andalusia, and I understand the differences, so I can guide people, and I tend to work mostly with expatriates on the different coastal areas in Spain. Going up from Malaga all the way up north to around Barcelona area, Catalonia, and I also deal with people in the Balearic Islands and Canary Islands. So, where we have expatriate clients, we do have a good understanding of the tax laws in those regions.
Okay, great. Well, look, tell us a little bit about Spanish inheritance tax and the different rules with the UK.
Yeah, so that's a key difference, I think, between Spanish and UK regulations. Because if we start with UK regulations, the UK likes to see when someone passes away, they have an estate, and then on the estate you normally have a nil rate band of £325,000, which means that when you inherit from the estate, anything up to 325,000 is exempt from UK tax. There's now also something that was recently introduced, which is called the residential nil rate band, which can give you another 175,000 potentially. So you can have approximately 500,000 tax exempt when you pass away in the UK. Whilst in Spain, you don't have anything like the estate, because in Spain they look at the person who receives the benefit. So each person normally has, if it's a close family member, they have an allowance to receive a certain amount tax-free. So, for example, in Andalusia, you can receive, if you are a child, grandchild, or a spouse, or a registered civil partner, you can inherit up to 1 million euros tax-free. And this 1 million euros is per person. So if I have, let's say, 3 children and a spouse, if I die, there are 4 allowances of 1 million euros each. It's 4 million euros that's exempt, which you can compare to the UK, which is only like 500,000 on the state. So I think from a estate planning perspective, Spain has certain advantages, especially for close family members. But you also, it can get a bit complicated though for people that have assets in the UK as well as in Spain. Depending on the connections that you have to the UK, you can still be liable for UK inheritance tax, certainly on assets in the UK, even if you pass away in Spain. If you have really close UK connections, you can actually be deemed as something called the UK domicile when you pass away, which means that you'd be liable for UK inheritance tax on all your assets, the whole estate, even if you died in Spain and lived in Spain for years before you died. So this is another reason why for people that have international assets, they need to plan ahead, because you can save a lot of money in inheritance tax by planning ahead and structuring the assets correctly. Sometimes you can save tax purely by putting the asset in another country, as an example. So because normally inheritance tax is payable, for example, in Spain, you pay Spanish inheritance tax if the asset that you receive is a Spanish asset, such as a Spanish property or Spanish bank account, cash in account. But if you have an investment in Luxembourg or Ireland and you die in Spain and your beneficiaries in the UK, and there's no Spanish tax on that asset.
Okay, great. We've been having a few questions coming from the audience, so we will go to one from Janice. When is the best time to sell my house before applying to live in Spain?
When is the best time? Right. So it's a simple rule. If you want to do it as tax efficiently as possible, you should sell your UK main property in the Spanish tax year before you move down. So to make it in simple terms, like if you, let's say you sold the property, let's say you sell it this month, it's August, and you move down to Spain somewhere between August and December this year, and you haven't spent any time in Spain previously this year, then you would have spent less than 183 days in this tax year for Spanish purposes, because you've been here, for less than 6 months this year. So you would have sold the UK property free of UK tax. And if you time events when you come down to Spain, you actually don't become a Spanish resident potentially until next year. So from the 1st of January 2023, you'll be a Spanish tax resident if you sell now, move to Spain at this point. So that's one way to plan ahead. Depending on exactly when you move, you may be liable for UK tax as well if you spend more than 6 months into the UK tax year. So that has an impact, maybe not so much on the property capital gains tax, but it may have an impact on other assets you want to sell tax efficiently. That's another reason why you should engage a financial advisor that understands both the UK and Spanish system and help you with a holistic view, make sure that your assets are disposed of tax efficiently and set up correctly and tax efficiently in Spain.
Muted. Okay. Right. Now, wealth tax. That's something we don't really understand in this country. Tell us a little bit about the wealth tax.
Yes, it's very. I think a lot of people don't like it. It's a bit punitive because you're taxed on assets that you've already been taxed on. Like you were working at some point and you were paying income tax, and now you've saved all this money and you've been really successful in saving. And now because you have all these assets, you pay this tax. But unfortunately, there is a wealth tax in most regions where expats are based in Spain. So, for example, here in Andalusia, again, there's a wealth tax, and I would say it really affects people who have many millions in assets. So it becomes quite punitive if you have like over 10.7 million euros in assets after deductions, because you would then pay, let's say 2.5% of the value in tax, and this can go as high as 3.5%, which are the general rates, which are not applicable to specific regions like Andalusia, Alicante, etc. So there are allowances. So, for example, for someone that has, let's say, they are Spanish residents, they have a property in Spain worth 600,000 euros, and they also have other assets such as investments, which are worth, let's say it's a couple, and between them they have assets worth 1.4 million euros, other than the Spanish property, so 2 million euros altogether. Would they pay any wealth tax in Andalusia? No, they wouldn't. No, because they have a 300,000 personal property allowance. They also have a 700,000 general allowance on other assets. And this is all based on net wealth. So if you have the loans or mortgages, you would deduct that from your wealth and your liabilities. So it's probably not as bad as some people may think. It's more of an issue if you're a multi-millionaire, but for most people that come down here and they've saved some money over the lifetimes to retire on, they have a few 100,000 or up to 2 million. That's normally not an issue.
Okay. Right, now here's a question, a bit of a surprising one. I don't know anything about this. Could you explain the Beckham law and who it is appropriate for?
Right. It's a bit complex. I would say that
we'll keep it simple unless it applies to everyone.
Yeah, okay. I would say that most certainly it doesn't apply for, it would be highly likely it applies to anyone on this call. So it was something that was introduced obviously with football player David Beckham. It's been amended over time, and it's a law that is designed to attract executives to have a work contract, like senior managers of some certain companies, that they can come down to Spain and they can have a beneficial tax treatment for a certain time. But it is a treatment that is really tricky to get, because you've got to comply with so many things. There's so many tick boxes you've got to adhere to that for most people it's just not available. So I've had this question before. Some people they're just entrepreneurial, they're quite clever. They say, look, can I just set up a business? And I just said, I want to do the Beckham law. Like, you can't do that. It's not easy. It's going to be normally a big multinational gives a certain type of work contract. But looking into exactly where you spend your time, and it's not easy. But if someone thinks that they should look into the Beckham law, that there are certain law firms that specialize in cases like that, and they can give you advice. And I'm happy to refer to someone that can help out with that.
Okay. Let's get. Here's a question. I've heard you need to report assets held abroad. Is that correct?
Yeah, there is a report that you need to do as a Spanish resident. It needs to be done to Spanish tax authorities. It's called Modelo 720. And basically, it's just information about any assets that you have outside Spain, which are worth more than 50,000 euros per asset class. So the three asset classes that this covers are cash, like in bank accounts or deposits. It covers investments generally, like collective funds, shares, bonds. It also covers property. And so even if you have an asset jointly with someone, let's say you have investments with your partner, it's 50,000 in total between you, so the share is 25, you still need to declare that asset. So it's a total value that needs to be declared, even if you just own part of it. This is not an extra tax, so it often gets confused with an extra tax, but it's not. It's just really an information obligation, so that authorities want to know what to keep abroad. And you need to do it initially when you go over 50,000 in these asset classes, and then it may need to be renewed if the asset classes go up in value by at least 20,000 euros. One of the good news I have for someone that doesn't like a lot of paperwork and doesn't want to ask their accountant or gestor, as they call in Spain, to do this for them, is that there are certain types of Spanish compliant investments that I can offer that, because they comply with Spanish regulations, this reporting is done in the background by the provider. So the client doesn't need to do this, and you don't need to pay an accountant to do it for you.
Okay. Could you provide just, we haven't got very long, we might get to some more specific ones, but could you provide any general tips on financial issues people should consider when planning their move to Spain?
Yeah, absolutely. I think the key things to consider, bear in mind that the Spanish tax year is a calendar year. It doesn't go from the 6th of April to the 5th of April as it does in the UK. So that means that you need to time certain events, certain transactions, especially in the overlap when you move over. And you should, for most people, the main thing to consider is what we touched on before, but selling your main UK residence. So that's key. When you sell it, plan ahead, because you like to sell it tax-free in UK. At the same time, you don't want to, be taxed in Spain on that sale. Then you also need to consider that ISAs are not tax-free in Spain. So the general advice is get rid of ISAs before you move down, because you can get rid of them tax-free. All that profit you're not taxed on in the UK. And then someone like myself can help you set up the investments tax efficiently here. And if you have a UK personal pension plan, for example, there are certain actions that you may need to take before you move down. For example, in the UK, you can take 25% pension commencement lump sum from your pension. It's tax free if you do it as a UK resident. But if you forgot to do it before you moved down, and you remember this when you are in Spain, it's a bit too late. If you take it out and you in Spain, you'd be liable for Spanish income tax at marginal rates. And if this is a lump sum, it's probably going to be more than 60,000 euros, then that could be taxed at potentially 45%.
So just by not thinking ahead, you could be losing tens of thousands.
Absolutely. I think a lot of people, they try to do things on their own, and just because it's so easy to Google things nowadays, and there are all these Facebook groups of expats, and people ask each other. But I don't think you should let the blind lead the blind. So I'm following a lot of Facebook groups, and I see people posting things without knowing, because they're not professionals, they're not working in a certain area. So I think you've got to be really careful who you speak to and whose recommendations that you follow. And for example, Chase Buchanan, we want to help people make the transition from the UK to Spain. So we are offering clients to have a free review where we talk about your individual circumstances, and I can then tell you what you should consider before you move down. And part of my plan that I'll come up with, which is personal to yourself, I do that all that work free of charge. And if we can find something that you find is interesting, which I'm sure we will, then we would charge you very competitive fees only if you decide that you want to proceed. So you have nothing to lose at all by having this review. A lot of people come out from these reviews with a lot of information that they weren't aware about, and sometimes I can't help people because maybe what they look for I can't offer. I'm very honest when it comes to these things. If I can't help you, I'll let you know. But I will always make an effort, and sometimes I can refer you to someone else who can help you, depending on what you want to do. But I think it's a good starting point speaking to someone like myself that can give you general guidance on the areas you should consider. And when it comes to restructuring your financial affairs, that's what I do. That's my job. I'm sure I can help you there.
Fantastic. Okay, well, look, we run out of time, unfortunately, today, but we do have another session this time next week, or this day next week, anyway, where we can talk about these things more, and perhaps people will come up with some more questions. We didn't get to answer all the questions today, so I apologise for those who didn't get their question answered. But do join us next week on the 11th of August. You'll need to register again, I think. We do recommend you get in touch with Chase Buchanan directly to discuss your requirements in detail. That we have all sorts of other resources available on our website, both on Your Overseas Home and on Property Guide. So do take a look at those resources and webinars. And thank you for watching this session, and thank you to John, and happy property hunting. Thank you very much.
just before we finish, just want to say that because we don't have the slides available, you can't see my contact details, but they will be in the slide deck that you receive. And I'm the only John Dyke in the world. So if you Google me, you'll find all my details on the first page of Google. So if you want to get in touch, if you have any questions, anything we haven't covered today, if you want to ask it to myself directly, then I'd be really happy to help you out. Just come to me and I'll make sure that you get the answers.
Brilliant. Yeah, we'll be sending everybody John's contact details tomorrow, hopefully with the slides as well. Great. Okay.
Thanks, everyone.
Have a nice evening. Good night.
Thank you. Bye. Bye-bye.